Ladies and gentlemen, good day and welcome to Muthoot Capital Services Limited Q3 FY22 post-results conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vidisha from Antique Stock Broking. Thank you, and over to you, ma'am.
Thank you, Lizan. Good afternoon, everyone. We have with us the management team of Muthoot Capital, which is represented by Mr. Madhu Alexis, who is the Chief Operating Officer, and Mr. Vinod Panikkar, who is the Chief Financial Officer. Without further ado, I should now hand over to Mr. Vinod Panikkar, who will give us the opening remarks and the financial performance of the team. Over to you, sir.
Thanks a lot, ma'am. Good morning, good afternoon, everybody. Nice being on a call with all of you once again. Yesterday we had our board meeting, and the figures for the quarter ended December 2021 was approved by the board, and that is what we are today going to present and discuss about that. The year, over the last 9 months, we have
call is now being recorded.
During the last 9 months, we have seen certain ups and downs. To begin with, in the first quarter, things improved in the second quarter, and we believe that the things have improved or become much better in the third quarter. And based on that, we did a disbursement of about 333 crores in the current quarter versus about 304 crores that we did in the same quarter last year. I'm talking about the retail loans. Last year, there was about 22 crores of some other loans, which are temporary short-term loans in the same quarter, but the regular retail loan was about 304 crores. Same quarter, in the immediately preceding quarter, we did about 310 crores. So this time, it's about 332 crores, and we are expecting the fourth quarter to be significantly better than the third quarter, in spite of having lost some bit of time in some of the locations due to the third wave. Basis the 332 crores, we ended up with an AUM of about 2,011 crores, up from about 1,080 crores that we had at about at the end of the September quarter, but down by 9% versus the same quarter last year when we were at about 2,200 crores, which has been reflected in the average AUM, and therefore a reflection is seen in the interest income also. In the interest income in the current quarter, we had an income of about 93 crores versus 99 crores that we had in the immediately preceding quarter, and about 120 crores in the same quarter last year. The 93 crores being lower than the last two numbers that I mentioned has got reasons, a couple of reasons. One is definitely the reduction versus the same quarter last year, when I did say that there was a drop of about 10% in the AUM itself, and about a similar amount in the average AUM as well. But more significantly, there was a reversal of about 8.7 crores in the current quarter, which was essentially on account of the company treating the movement of accounts into 90 plus and then coming back into less than 90. But the belief that the company has is that this while it is still below 90, and in the normal circumstances, the accounting policy permits us to take income of that. As per RBI direction, we are not permitted to recognize any income on NPA, and therefore, whatever increase happened, basis the 11th or 12th November circular, we have reversed an income of about 8.7 crores. If that reversal was not there, then we would have reported an income slightly better than the immediately preceding quarter, but still lower than the same quarter last year. On the finance expenses, we spent about 36 crores versus about 45 crores in the same quarter last year, a drop of about 20%, which is mainly on account of on two accounts, I would say. There being a 232 crore reduction in the utilization of funds in the current quarter versus the same quarter last year, which gave us a benefit of roughly about 5.5 crores and about 2.5 crores on account of reduction in the interest cost. From about 9.4%, we have been able to bring it down to about roughly about 8.72-73%, which has benefited or given us about cost benefit of about 2.5 crores. Again, the same immediately preceding quarter, we have been able to speak to the banks and been able to utilize funds of 96 crores lower than the immediately preceding quarter, which has given us a benefit of about 2.5 crores and about another 50 lakhs of reduction is on account of the interest rate reduction that we got. Banks have been very, very supportive. In fact, they have stood by us during the last couple of years, which have been very torrid for us, and we are grateful to the banks and the other lenders who have actually stood by us during such times. Basis with the interest, net interest income went to about 57 crores versus 60 crores in the immediately preceding quarter and 76 crores in the same quarter last year. The operating expenses was higher in the current quarter versus the immediately preceding quarter by about 3.5 crores, which was mainly on account of increased collection costs because of the specific emphasis on collection. The team being set up, higher incentives given to the agencies for collection. All this leading to some bit of increase in the collection cost. Most of the other costs have remained more or less same versus the same quarter last year. Also, there was a minor increase of about 5%. On the loan loss provisioning bit, the increase has there has been a significant decrease because of the reduced movement to S3. Now, this I will explain to you people very clearly. I would need attention from all of you on this. Movement to S3 basis the old norms and basis which the provisioning under the ECL method, that went down significantly. Last time I remember telling all of you that we have made additional provision of about 10 crores because obviously Q3 after coming back in Q2 after the second wave, we were wanting to ensure that no things are going okay in Q3. There are no significant issues, and therefore in the last quarter we have kept an additional provision of 10 crores. This time we have ensured that we have just not kept too much of additional provision. We have kept additional provision of 2 crores. Overall, the additional provision on the books, besides what is demanded by ECL, is about crores on the books. On the classification in terms of NPA, as per the IRAC norm and as per the Ind AS, we have, for the purpose of reporting, we have reported a figure of about 27.8% in terms of IRAC norms for RBI purposes. But if one goes by the older norms, we are still similar to what we were in the last quarter, but a minor increase from our 19.8% to about 19.8% to 20.4%. That has been the increase. So while we have reported an higher GNPA in the buckets in which these accounts are have permitted us to reduce the provisioning in the current quarter to about 7.4 crores. We are happy to be showing a positive bottom line after negatives for the last couple of quarters, and we have reported a PBT of 6.1 crore versus about 18.5 crores that we did in the same time last year, but did a negative 10.6 crores in the immediately preceding quarter. On a 9-month basis, we have been able to disburse about 779 crores versus about 460 crores that we did 9 months last year, and add a book of about 2,011 crores versus about 2,199 crores at the end of December last year. Income generated was at about 290 crores and versus about 395 crores, the reduction of 27% being largely on account of two factors. One is definitely the reduction in AUM by about 10%, or AUM by 10%, average AUM by about 16%, and the balance being on account of NPA, which leads to us not recognizing the income on those assets. And I have said that earlier also in my previous presentations also, that on NPAs we don't recognize income. In fact, in this current quarter, I had mentioned that we did not recognize income even in the accounts which are at less than 90 buckets. On the on the finance expenses, we were at about 115 crores in the current quarter, in the current 9 months, versus about 145 crores in the 9 months last year, a drop of 20%, largely on account of 262 crores of reduced utilization, which possibly gave us a reduction of about reduction of about 19 crores, and further because of the interest reduction, it gave us a reduction of about 9.8 crores to 10 crores. We are reporting a bottom line. Operating expenses have been more or less in line with what we had in the 9 months last year. Same is the case with loan loss provision, which is slightly higher by about 6%, but then broadly at the same level as last year, 9 months. This has meant that we report a bottom line of about negative 18 crores and versus the 43 crore positive that we had for the 9 months last year. I will possibly pause over here. I will request Madhu to talk a bit about the operations, and then we will jointly address any queries that you will have. Madhu, thank you.
Yeah, thank you, Vinod, and good afternoon once again to all of you, and thank you for joining this call. I'll try to be as brief as possible so that we can have more Q&A time. Like Vinod mentioned, after the second wave, we saw two-wheeler industry improving month on month till September and October. Actually, that is the time when the festive season happened. But in the month of November and December, we saw some kind of challenge both from demand side and the supply side, and the average sale for these 2 months was about 10 lakh level. But after the second wave, as we reached October and September, there was a very clear-cut indication that there is demand in the market, and the sales numbers were actually looking pretty good. In Q3 21, against a total sale of about 48 lakhs, Q3 22, the industry sales was about 36 lakhs. So that is the level of drop that has happened. As I mentioned, there is both demand and supply side pressure. Key thing is that we believe this average 10 lakh sale is actually bottoming out. And we firmly believe that from here, I mean, this bottom level of average 10 lakh, it should definitely see an uptick as we go through the Q4 and the next year. Third wave definitely had its own impact, but it was at manageable level. It was not a very severe one, and besides a few lockdowns here and there, and things are back to normal now. And hence, we have a very great hope about Q4. The point that I'm trying to mention here is that the auto industry related problems that we've been hearing starting from four-wheelers and then the two-wheeler pressure I think the time has come when actually it would bottom out. Cars are definitely looking slightly better, but two-wheeler also would bounce back. I had been mentioning earlier that India is the largest two-wheeler market, and the two-wheeler is the primary mode of transport for the common man. And this market is still unpenetrated in India. We have about 100 two-wheelers for every 1,000 people, whereas internationally it is much more when you compare to Thailand and Indonesia. And we feel that the potential of this is at least twice, at least 200 per 1,000 is what the potential in India is, double the market that we are talking today. And I feel that with the emphasis on infra through Gati Shakti, which got announced a couple of days back during the union budget, I think that is one very strong initiative that would push the transportation industry to the next level. And from our perspective, I think the MSP that the government has declared that would really enhance the cash flow of the customer, which is the need of the hour. So tier 3, tier 4 centers, rural areas, I feel that the cash flow levels, the income levels should definitely improve there, and the two-wheeler industry should start looking up. The point that I'm trying to make, and I mentioned earlier, is there a bottoming out? We have a feel that it is bottoming out, and there are various signals and initiatives that would really make this up. From MCSL perspective, if you look at the overall disbursement that we have done in Q3, about 332 crores, this is the highest we have done after the COVID pandemic started. And we have seen disbursement improving quarter on quarter. Team had been able to reactivate all the business touch points, business and collection touch points both, and it has improved substantially after the second lockdown. So we are moving towards business as usual, active touch points from where we do business and collections both, and as a result, our market share also improved, compared to last year Q3. Which was about 0.93%, and this Q3 it is about 1.19%. And I've been telling always to the investor community, analyst community, that our target is 1.5 to 1.65. So we are moving towards that. Long way to go, but definitely we can see a positive uptick there. Besides, now we would start pursuing our expansion plans, which we had kept in abeyance. We had informed you we'll keep it in abeyance for some time, and we'll start pursuing that as we enter into the Q4 and the next financial year. From collection perspective also, we are seeing improvement across all buckets. It is there in the presentation as well, how the collection efficiencies are improving, and bucket 0 efficiency in two-wheeler industry is about 93-94%. We are consistently at 96%. That is a very good sign. At the same time, a lot of action has happened in the ground in terms of customer connect programs. Wherever after the second wave, and then when we were allowed to travel, meet, and touch base with customer, very well planned customer connect programs has been rolled out. These are all measurable action plan, which is monitored on a number basis, on a resolution basis. So that has got rolled out. I think from the perspective that all the handicap that we had after the COVID-related pandemic, I think those are waning out. We have only we hope to see only positive things happening as we go forward. Of course, Q4 is generally a good quarter for us, and so we believe that whatever plus we have done in Q3 would continue in Q4 as well. We can discuss more during the Q&A session. This is all from my side right now, but any specific questions, we'll take it up during the Q&A. Over to you, Vidhi.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Akhil from Robo Capital. Please go ahead.
Hello, good afternoon. Am I audible?
Yeah, you are audible.
So, in the previous Concall, you had mentioned, the target for disbursements would be around 1,900, and right now, currently, obviously, it will be tough to reach that target. So, for FY23, I just want to know, would you have a similar target then in disbursements?
Madhu, you take the call?
I can give an indicative answer on this, Akhil. Our Q1 was a total washout due to the lockdown.
Right.
But I can give you an indicative number in the sense that during the last year we did around about 1 lakh unit we had done, 1 lakh numbers that we had planned, okay, what we had done. And this year we expect to grow by about 50% from last year. So that is the
50%, 50.
Yeah. So we are looking at 1.5 lakh unit this year. Given the industry as of now, and if industry really bounces back, then we can look at slightly higher number as well. Vinod, if you'd like to add.
No, in terms of absolute numbers, last time I think last year we ended at about 750 crores. And this year the way things are going, we have done close to about 800 odd crores right now. We should hopefully maybe end the year at about 1,200 to 1,300 crores, which is possibly slightly more than 50% higher than what we did last year. And even 1920, where the last month was actually washed out, we did about 1,800 crores. I think that should be the number that we will possibly want to go for in the next in FY23.
Right. And could you give us any guidance on credit cost? What would be like in FY23?
In the current quarter, the cost was about 3.99%. We expect the number for the current quarter, we expect the number to come down as we go forward. In the past, we were in the range of about 2.5%. So I expect it to be in the 2.5%, 3% range. On a consistent basis, next year I am expecting it to be a normal year with none of these lockdowns or anything anywhere. So I would safely say that we should go back to the previous normal of about 2.5% to 3%, maybe closer to 2.5%.
Okay, fine, great. And my last question is just regarding what is the current ticket size?
Current average ticket size was about 79%.
79%.
LTV was 79%. The ticket size is 76 rupees.
Sorry, in rupees, how much is it?
76,000 in rupees. In percentage terms, 79. LTV was 79% in the current quarter.
In the current quarter. Okay, fine, great. Oh, thank you so much.
Welcome, Akhil.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and one. The next question is on the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, sir. In terms of your gross NPA, we were expecting that, I'm comparing like to like, but still this quarter could have been a quarter where gross NPA numbers could have actually come down. So any reasons why the gross NPA number continues to sort of inch up on a like-to-like basis?
On a like-to-like basis, Sarvesh, Vinod Panikkar here. On a like-to-like basis, I did say that it's 19.8 versus about 20.4. It's because of the increase that we saw in the month of November. November was a month where we did where we had issues on the ground because of rains in several parts of the country, mainly in the southern India. And then the NPA actually shot up in the month of November. The team actually recovered and brought it down to came closer to the October levels after that in the month of December. But then the month of November was definitely a month which actually created issues for us.
So what's the expectation like for for the closing of this year and for next year?
I will first talk about the current year. Maybe in the current year we are, because let us say we are on a old norm basis, we are reporting about 387 odd crores of NPA. We expect the number to go down to about let us say anything in the range of about 325 or 330 crores by the end of the year. In the last time when we had a call and we had a figure of 260 crore, we had seriously expected the number to come to about 310 crores. But I believe that we will be in the while the teams have taken a much stringent target, I would say that 325 is something which we would want to commit on, saying that no, this is what we will try and achieve by the end of the year. Next year, we expect things to go back to, if things go back to normal, then maybe even when the book grows up significantly, the overall, the absolute NPA should start coming down, and then we should start maybe talking about a gross NPA basis the old norms of about 10-12% versus the 20 that we are now talking about.
Mm-hmm. Okay. And in normal times, you would have probably been at 5-6%, right? So in
normal times, we were in the range of about 4-4.5% at the gross NPA level, and net NPA was much lower than that. But why I'm taking this telling the figure of 10% something for the next year also is mainly because of while we are expecting things to be normal, we expect some bit of turbulence and some bit of, I would say, corrections which would be needed on the ground, which could possibly get into the first quarter and the second quarter. So I would safely say that we should, and even at the AUM level, I am saying that next year disbursement, I am saying that we would want to be at the FY20 kind of level, which is 1,800 crores. And because the business is such where the book decreases faster because of the lower tenor loans, that would effectively mean that the percentage will remain reasonably elevated. But it should be significantly better. Our NPA should be significantly lower than what we are seeing in the current year or at the end of this current quarter. We will see some bit of benefit or reduction in the next quarter itself, in the fourth quarter itself.
But just a couple of quarters back, I guess we were still at 10-12%. So I think from there, 1.5 years down the line, if you have the same number, it does look like your NPAs would be sticky as per you.
I fully subscribe to what you are saying. June 21, the NPA. Was at about 17%, was at about 17%, and maybe March it was at about 12%. So there has been some bit of increase, which has been largely due to the AUM not growing and definitely some bit of absolute numbers also getting added. But we should, in fact, in the fourth quarter, be able to go, if we are at about 325 crores, we should be in the 15-16% range by the end of the current year itself.
But March 21 to March 23, you expect to remain at the same percentage of gross NPA?
Sorry?
From March 21 to March 23, you expect to remain at the same level of gross NPA in terms of percentage?
Yeah, it's a lot to do with the kind of growth of NPA that we saw in the first quarter, second quarter, and some bit of it in the third quarter also. So bringing it down would be an Herculean task, and that's the reason we are saying that we will be in the 10 to 12% range by March 23.
And typically in your business, after how many months you are reasonably sure that, this loan is lost? So why not write it off, at least from your books, if that be the case?
Something which we can always consider, but I would say that while we write it off, it may, and we remove from the books, we can also we can look at it as an option, maybe something which we don't do. We normally try and ensure that we keep it on the books so that it is on the radar of everybody, so that there's a collection effort which goes into it.
No, but no. So the question was, let's say after 3 or 6 months, if the customer is not paying, then in general, what is your LGDs in those cases?
The current ECL norms that we have in place is basis the kind of structure that we have seen over the last 3 to 4 years. How the customer moves from one bucket to another, where he was at the beginning of the year and where he has gone to at the end of the year. So, all basis that we have factored in fact, even in S3, we are factoring in a percentage as high as about 48% currently. Because we believe that that is the kind of customers that we deal with. So maybe the percentage, that's the reason our provisionings are also higher, significantly higher than what even the IRAC norms determine. And basis the IRAC, we would have possibly been reporting about 150 crores of provisioning, whereas we are reporting close to 265 crores of provisioning. That's because we believe that the type of customers that we deal with are customers who need, who might, let us say, default, and therefore provisioning should be adequate. So while we don't remove from the books, we are ensuring that we give treatment, proper treatment in the books to ensure that there are no inflated bottoms anyway.
So I'll add a bit here, Madhu here. See, once the COVID had hit and there were lockdowns, even one and second, I think these customers are not intentional defaulter customers. Out of circumstances they could not pay and they landed in 90 plus TPD. These are the customers, and there are many customers in 90 plus who will keep on paying one installment or two installment or 1.5 installment, and they'll keep on having some kind of relationship with the company. They would make part payment, though it may not come out of NPA, but still there would be a relationship with the customer in the sense that he is not able to get 4 installments or 5 installments together. And in the second lockdown, that was more prominent. Like second lockdown, the impact on NPA, around March, we thought we'll come out of it, but after that, suddenly, again there was a jump in the NPA. So how our approach had been, collect as much as possible from customer rather than going very aggressive and do repossession and things like that. These are the customers who are not regular defaulters, like pre-COVID, there used to be a set of customers who will default. I mean, that was intentional. The vehicle may not be available and things like that. But here is a set of customers who have very good set of, their business model. There'll be small shop owners and things like that. Out of circumstances, their cash flow is impacted. So we have to balance both in the sense that while there is a segment of customer where you need to go aggressive and do the collection, there's a set of customer and you need to have a relationship where they continuously pay your installments and come out of the problem. So we have to balance both. I mean, it is not that we'll straight away write them off, but we'll wait. And this was different circumstances. Everyone experiences for the first time, and so we have also learned over the time that these are the customers whom we need to keep on collecting the money. And secondly, we feel that if we go all out repossess and sell it, there could be repo losses as well. Better to collect the money and bring down the pause levels and ensure that account is active and we keep on getting the money, rather than customer totally vanishing or not paying at all, and then we have to get into a very serious kind of recourse like repossession or legal and things like that.
Maybe to add to what Madhu said, Parvesh, in the slide 26 which we have uploaded, look at it, we have mentioned that 9.2 crores has been collected in Q3, but the account has not moved out of HTA. Now that is actually reflecting 21,400 customers. So maybe to add to what Madhu is saying, see, it is not that the customer doesn't want to pay. Possibly he doesn't have the wherewithal to pay you the amount, but he's still paying you. So 21,000 customers out of the guys who are NPA, they have actually come and paid money in the current year, in the current quarter, sorry. So I would say, and that will continue. So maybe if we remove the guy, mark it as a write-off and then write it off from the books, we will not be able to have complete focus, because that's one thing. Secondly, the team has themselves taken aggressive targets, and we have actually come up with attractive waiver schemes of some other charges and other things, so that the collection happens on the ground. We have seen a robust collection in the month of December. We have seen very good collection in the month of January. We are expecting the same trend to be at least that or even better or much better in the month of February and March. So now things totally opened up in June. There were some cases where guys who were down with COVID and things like that, and they were possibly held up for 5-6 days. It's not the case now. Things are opening up, and we are confident that the numbers will go down, and that is why I am saying that the MP in absolute terms will go down.
Okay. Thank you, and all the best.
Thanks, Parvesh.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Vinay Jadwani, an investor. Please go ahead.
Hello.
Hello.
Yeah, I'm audible.
Yeah, you are. I didn't get your first name.
Vinay Jadwani.
Vinay.
Yeah, Vinay.
Okay. No.
Yeah. My query is regarding the dividend policy. A few years back, the company changed the dividend policy for the sake that it would retain the dividends for reinvestment for future growth. But other companies, other finance companies, even the parent company, Muthoot Finance, they also are growing, and even growing more than the Muthoot Capital actually, and they're still paying dividends also. So when is the company considering this year is a washout year for sure, but in future is there any timeline when we can see the change in dividend policy, since the growth pattern is it's not growing actually now, and for that sake only the company changed the dividend policy. So would like to know more about the dividend policy in future, of course.
Two things. One is we are Muthoot Finance is not our parent company. They are a separate group actually.
Sir, your voice is sounding very muffled.
Mine, ma'am?
Yes, sir.
Okay, I'm extremely sorry. Am I clear now?
Much better. Thank you.
Okay, I'm sorry. Vinay, first and foremost is Muthoot Finance is not our parent company. It's not a part of the group also. Muthoot Finance is the red Muthoot. We are Muthoot Papachan Group. We are the blue Muthoot. First, and definitely they are making use of, they are giving huge dividends. We had actually changed this policy sometime in after 2016, where we thought that no, it is let us retain the funds stock both, and that is the time when we after 2016, my memory is we have given any dividend. We hope to start the trend once again. We are hoping for better times to come, maybe to see growth in the AUM and in the profitability. Definitely, we will want to change our practice and obviously want to satisfy everything. But in our case, I would say 62.5% is held by the promoters. So obviously, they would be also keen to take it back. But then, in the interest of the company, it was decided that no, we will not look at any dividend distribution right now. So I'm sure when things improve, we'll definitely start looking. Maybe this year was, like I admit, is a washout, but definitely better times will be a better time, and better times will come, and maybe we will be in a position to change our policy regarding dividend.
Okay. Thank you.
Thanks, Vinny.
Thank you.
Thank you. The next question is from the line of Vidisha from Antique Stock Broking. Please go ahead.
Yeah. Sir, actually, you mentioned that you would like your GNPA by year end to be around 325 crores. So, which means that you will see a recovery, or at least reduction of NPAs at least to the tune of 200 crores. So, how do we see these recoveries, such a sharp recovery coming in Q4? Like, I understand it's a strong quarter, but still, how do we see such a sharp recovery coming in?
Ma'am, I mentioned that the reduction to 325 crores is based the old norm. I am repeating that when I am talking about NPA right now, or the target that we have given on the ground is for the current year at least, we will need to change it because the RBI circular of 12th of November is a recent, and then converting the guy on the ground who is not able to pay even one installment, to convert him and make him pay four installments is not something which can happen in 3 months or 4 months. That's the reason when I had mentioned 325 crores, I had very clearly said that it is based on the old norms. So what we are effectively doing is we will go from about 387 crores to about 325 crores, which I said was a drop of about 62 crores. So for which the team has been charged that there has been specific, I would say, benefits given to the staff, benefits given to the agencies, and there is an all-round effort on the ground to ensure that the collections happen.
Okay, got it. And sir, as per the old norms, the GNPA number that you mentioned around 380 crores. Sir, do we see any customers who have still not paid a single EMI in that case, or in all the customers who are in the stage 3 assets, all customers are at least paying one EMI, or is there any customer or percentage of customer where they have not paid a single EMI as yet and they're still under GNPA?
There will be, ma'am, this non-starter is a regular, I would say, feature of the industry, and there will be some amount of customers. Now, if we look at our own account, we could have, maybe out of the total NPA, we could have a couple of hundred accounts where people have not paid a single EMI. So that's maybe if I look only at the last 2 years figures or disbursements, I will definitely have my last count was something like 93 or 100. So there are people who are not paid a single EMI. But then that is pretty common. The guy takes the money and then when the first installment comes 45 days later, possibly something else has happened because of which this issue has come.
So just to add to Vinod, Vidhi, among all the NBFCs and banks who do lending and especially retail lending, they track the non-starters and first EMI, second EMI, third EMI, FEMI, semi, TEMI, and after the pandemic, I had told during the calls also, we have kind of slightly tightened our credit norms as well. Non-starter and FST, we call it. FST norms, those are the things we did not change. And current portfolio behaves in a similar way what it was pre-pandemic. Okay, so just to assure that because of pandemic and there are problems in the market and first lockdown came in, second came in, and now there is a third wave. So we have taken care in terms of our credit delivery, in terms of portfolio management to ensure that portfolio behaves like pre-pandemic. So existing portfolio would have gone into slightly problem in terms of repayments and things like that. But whatever new business we have done, we have ensured it behaves like pre-pandemic. So just to tell you that from non-starter perspective, from the portfolio management perspective, from the early delinquency, team has kind of contained that, controlled that. That is within the permissible limit of the organization.
Okay, got it. And lastly, sir, our borrowings have been reducing. So do we see any fundraising in the next couple of quarters? And if yes, then will that lead to increasing of cost of funds?
Ma'am, the lenders have been very supportive. In fact, in times when business has not grown, they have permitted us to have the sanctions in place, but permitted us not to draw. I told them that, no, okay, even if you don't draw right now, it is fine. So the basis that the utilization has reduced, but definitely with the disbursements expected to go up in the current quarter also, and we are also speaking to some of the lenders, we are speaking to some of the other investors who would want to come for PTC and other transactions, and we are definitely going to look at raising at least about 300 crores in the current quarter. Some of it for the current quarter, a lot of it, some of it for the next quarter.
Okay, but this shall not see any increase in cost of funds, despite we are raising funds in the current quarter, the next quarter, but that will not see any increase in cost of funds, and which will, right?
We intend to utilize a lot of it in the by way of disbursements in the current quarter. So we, even if the cost of funds, definitely we will see a uptick in the revenue, which will compensate or more than compensate for the cost.
Okay, fine. Got it. And sir, Muthoot, especially how do we see the non-two-wheeler portfolio doing? Like, how is our strategy working out there, and is there any update on further updates on the non-two-wheeler segment that we have been growing?
The non-two-wheeler book is about 24 crore as of now, and it has the NPAs and collections has remained within the permissible limits. During last few calls, we had said that we had expansion and things like that. We have kept in abeyance. We wanted to wait and see how the things pan out. And I have mentioned during my initial call that now we are looking at expanding whatever we had put in abeyance and used cars is something which would definitely budget it as we go forward. So from the perspective that how the portfolio is behaving, it is within the permissible limits that we have done. Do we have the are we looking at growing this? Yes, we are looking at growing this, and we'll come back, to the investor community, to the analyst community once we are ready with our next year's budget, and we'll give a very clear-cut action plan on, the centers that we are going to operate and, which are the markets that we'll operate. Give us some more time, maybe a quarter's time, and we'll be able to update on that.
Sure, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to Ms. Vidisha for a closing comments.
Thank you everyone for participating in the call. Madhu sir, will you like to conclude the call?
Sure. Thanks once again to all of you for taking your time to connect with us. I think I have mentioned during my initial discussion as well that two-wheeler industry definitely is going through the challenging times, and I mentioned about both demand side and supply side issues are there. But at the same time, what gives us confidence about this market is that how it actually bounced back after the second wave, and we saw, at the end of Q2 and starting of Q3, numbers touching about 15 lakhs. And then we have seen a dip in November and December. We feel that this is the bottoming out of this industry, and there are very positive signals from the ground in the sense that how the customer's cash flow is improving, how the business is improving, and with the movement of people, I think, and as the schools and colleges open up, economy opens up more, we have all the reasons to believe that Q4 onwards things should look much better. What was till September and October. We have actually been able to grow compared to last year. Last year was a very low base, although. But I think that we have all our aggregates in place, all our action in place to really make it back to what we were at the pre-pandemic level. Vinod mentioned about, we want to reach somewhere what we were in 2020. That's definitely a striking reach for us. We'll definitely reach there. And also to assure that in terms of all the initiatives that we've been telling that we have put in a bench, it is something that we'll definitely open up. And as we go forward, you'll see uptick in all those initiatives as well. May I ask Vinod also to add his concluding remarks? Vinod, please.
Mr. Vinod Panikar? Mr. Vinod, we are unable to hear you.
Hello?
Yes, sir, please.
Yeah. Please go ahead, Vinod.
Yeah. Sorry. Thanks, Madhu. Thanks everybody else for being on the call with us. We are definitely happy in the current quarter that we have been able to report a positive bottom line. In spite of us having made additional provision basis the new norm of close to 9 crores. But we are expecting the fourth quarter to be significantly better than the third quarter. And maybe going forward, things to be better or go to the at least the 1920 levels, maybe from the next financial year onwards. We are thankful for all the support that we have got from all of you. We request for a continued support, and anybody else has any queries on anything that they have seen in the presentations or something in the presentation that doesn't talk about, you please feel free to call us up and speak to any one of us. We are always ready to answer any queries that you have. Thanks once again.
Thank you. Ladies and gentlemen, on behalf of Antique Stock Broking, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.